Morning all, welcome back to the channel. James here. Please feel free to press the subscribe button right now and press the notification bell so that you don't miss out on future updates. Let's get into the charts. I've got the stock charts in front of us now. The big question is, what's going to happen today at these low levels after a decent correction in both the Nasdaq and the S&P? We saw some signs of life on some names like Palantir, Tesla, maybe Google, maybe Coin. Actually, even Nvidia had a good bounce yesterday, and we saw a little bit of hesitation down at these support levels on the Nasdaq and the S&P. The question is, are we accumulating or distributing here? In other words, are we building up a base here, or are we building up and collecting liquidity for a further move down? It's all really not very clear right now, but I can say that we are long, and we've got a position from there and from there. So slightly in the money on the lower one and out of the money on the higher one. I think though, looking at this chart, it's a one-way street. It's incredibly steep. We're well away from all the moving averages and the means and through the Bollinger Bands. Not the long-term Bollinger Band. You can see we've still got some space to go. But let's say the 20 or 50 period Bollinger Bands. So pretty oversold and trying to set up for a base here. We're long and we'll see how we go. Same thing on the S&P, not all that convincing. Most of the day yesterday it was very low and towards the bottom. We did get a little bit of a relief towards the end of the day and a bit of a bounce up in pre-market today. We have one position long on the S&P into that order block. That's about a 10.2% correction on the S&P, which brings it into correction territory as the Nasdaq is. I think there's every space for a bounce back up to at least the 200 period moving averages. That's the purple line on these top two charts. I'll zoom in while I'm talking now just to show you. You can have a look at the numbers at those levels at the purple 200-day moving averages. We have a long on Tesla right from the bottom. That's looking okay. Bit of a pullback yesterday, but not too bad actually. And holding above that very key red line. And that's at 238. So we're holding there for now. And well, perhaps we'll get a short squeeze overall in the markets, considering the positioning, the extreme fear and greed, and actually really good CPI and PPI numbers this week so far, which should lead credence to the idea that the market might be leaning more towards cutting rates than holding or even increasing them. I'm not saying in the next meeting or two, but certainly good prints for a bit of a bump in the market. Let's put it that way, even though it was muted yesterday. So we're long on Tesla, we're long on Coin, we're long on Google, Google, and that one also pretty much like Coin, languishing down into the support level. I think we could get much higher on all of these, and if and when we do see a rally, and assuming that this is not and if we haven't even got it yet, but a dead cat bounce if we get one, assuming that this market is still not a bear market and that we still have some potentially even higher highs to go, that's what we're looking for. So that's that. Now going across to currencies very quickly, we have one position, actually two. We're long on the dollar yen. Let's have a look at the day chart on this one. We've spoken about this one often for days now because it's just not really doing anything. And we bought out that order block at the bottom. Target for this, I think, is just a mean reversion back up to the trend line or one of these longer term moving averages back up here. I think maybe 51, maybe 51.2, 51.8 would be good targets to then exit this long trade and reverse to the short side. My overall direction for the dollar yen is still on the short side down to into the 140s, 130s, and probably even the 120s at some point. So we'll be looking to reverse this trade at some point soonish. We also have a short trade on the euro yen, and I've shown this chart before, so I won't do it too much now, but just looking for this pattern to play out. Essentially a big rally, a massive drop, and a bear flag forming here underneath the trend line, underneath the moving averages, and various order blocks above us. So we're short here, looking for a move down to 144. That'll take some time, not overnight. We'll probably be in and out along the way. So that's all of that. Now going across to crypto, bit of a bounce. Yesterday slumping back down again, but today again, Ethereum, Bitcoin, and XRP all trying to peep up a bit. But that's not the story of the day. We're long on all of those, as you can see, and we're just waiting for something to happen for these markets to find some support. If they're going to, I think today is a good start. Maybe if we get some rallies in the stock market and these can follow suit. But the story of the day is actually gold and silver, and we're long on both of these. We took a long on silver yesterday, which has worked out pretty well so far. But this is gold. Have a look at where we got long just under that trend line, but after breaking out through that short-term top. If I look at the 4-hour chart on this, it illustrates it a little bit better. And we went long on the breakout of that local swing high, triple top. We got above that, pretty important level, a triple top. And as we broke out, we got long. And luckily for us, we burst up through those trend lines and carried on moving higher. So we're approaching 3,000, and I think we'll probably push through there. Either one of two things. We'll touch it, maybe pierce it, and then collapse back down again. But I think because this has been so delayed, the attack on 3,000, that we could see this move through and move higher a little bit faster. So I'm aiming for above 3,000 on gold, probably 31.20, 31.80, maybe 32, maybe 33. Who knows? We'll get out of this trade when we see signs of reversal. We also went long on silver yesterday, similar sort of reason, breaking up through there. We got in a little bit before the breakout, but after breaking out through the bodies. But this dip down below the trend line, a reclaim, a test from the top, and a burst higher with a big bullish candle, and we got long, and it's looking good so far. My target for silver, we'll need the week chart to see that. That's where we are right now at around $30. And we've seen silver up as high as $49 in the past, and I think we could go even higher than that. If you go even further back in time, you can see that $45 to $50 range is a pretty important level. We've hit there twice, fallen back, but the time period in between this current attempt and the last one is much, much shorter than the previous gap. And of course, we've got an upward sloping support channel below us. So it's all looking pretty good for silver and building up perhaps for another attack or move on $50. I'm saying 60, and I've been saying that for a while. I'll come back to that one day when we get to $60. Going across the energies, before I start on natural gas, we're still long on URA, looking for this to move up. Have a look at yesterday's video. I talked about URA and the URA futures, where we are on the UX1 shriek on the COMEX at the 200, at the 50% support level, oversold. All looks good for a setup long. It's just taking time to build a base. We're also still short on Brent crude. I'll leave you with yesterday's video to look at that as well. But I've said this so many times, and it's taking so long for us to get through this Moab break level. We're consolidating at that level right now, and a breakdown through there should take us much lower on Brent crude, down to, first of all, the channel bottom, the shorter term channel, and then maybe even the longer term channel. Bear in mind that oil is messy and choppy, as you can see, it always is. And so these are not instant and clean moves, and we have to expect a lot of thrashing around. So we're still short on WTI for a target of about $50 eventually, and maybe even lower. Now, on natural gas, we just got out of our long trade. I put this up on X and on YouTube yesterday. We got long there on that reversal candle. That candle didn't last. We got rejected by the 100-period moving average and the 20 curling down. We then had another bearish candle, and at the top of that one, I exited or closed the long trade for a 1 cent profit. And that's the record of our trades in this contract so far. Short over there, short over there. Hedged over there fully. We got out of the hedge, took profit up at the top there. Added another short after having taken that profit. Got down there, took the profit and went long. And then we took another 1 cent profit on that long trade after that long trade failed. So what are we going to do? I'm going to hold this over the weekend. I don't have any particular view on natural gas. Although longer term, we're above $4, and anything above $3.75 for me is kind of bearish. When we're up at those sorts of levels, we should normally be looking for shorts. Most of our trades on this contract so far have been shorts, except for that hedge. And then the long yesterday, which failed. So the only long trade, well, I say it failed, we took 1 cent profit out of it, but the only long trade we tried has not worked out. And so we'll still be looking for the short side, but this weekend may or may not have a gap or up or down. I don't know. I'll be watching for that. And then I'll set and determine a new direction next week. Always in mind that we're looking to sell the rallies, sell the pups. Natural gas above $4 is expensive. We want to be selling natural gas up at $4, $5. And we want to be buying it down at $1.80, $2, $2.50 in general. Of course, the market thrashes around in those ranges, but it's not always clear which way it's going to go next, and that's why we use my trading techniques. If you'd like to join my natural gas webinar next week, there's a link below where I'll be giving the sort of bare bones of my trading strategy. I'd love to see you there. The seats are limited, so make sure you put your nat in. So my general strategy on nat gas right now is to be flat cash over the weekend. I wait to see what happens over the weekend. We may gap up, we may gap down, we might not gap at all. And I'll be looking for my next trade to set the entry levels, bearing in mind that we're looking for the short side generally at these sort of prices. So going across to this chart, we're also short on the VIX and long on TLT. Actually, VIX is just trying to turn around. We got short pretty close to the top. And if the market does rally today, the S&P particularly, we should see the VIX begin to move down. And we're also long on TLT, which got a little bit of a bump yesterday. I'm going to exit this trade at the 200-period moving average at around about 92.8. I've been holding on to this for way too long. And really, it's just in a very, very long term, if anything, bear flag or angling down wedge. So I just don't really like it for the long side. So I'm going to exit at the 200, maybe a little bit higher if we get a sudden pop, but it's just a very long and boring trade. And the moment I exit, of course, that'll go smashing up through all those resistance levels, and those who remain long will be in good profits. Going across the softs and grains, we remain long on sugar, short on cocoa, all looking pretty good. We'll exit cocoa back down in these levels down here, probably the pink zone. We're still short on coffee. We'll exit coffee at the top of the channel and that little trend line there. Sugar, we'll exit at that blob, I forgot to mention. We already took some profit there, and we rebought another tranche at the dip down to the channel center line. We're also long on corn, not very exciting, just hanging around there. We're long on cotton, I like this one very much. We're now testing the top of the channel once again, after having tested the bottom, and same old story, we've got several long tranches on there. And most of them are now in profit, which is going to be a really good trade if this one works out. The target for cotton is 70 and then 74.2. We also went long on orange juice at these low levels, trying to get a bounce off that one down, one up reversal pattern at support. There's the support level, long way to the left. It's the 61.8% Fibonacci level of the entire move up. Calamitous crash down back into that level. Obviously incredibly oversold and due for a bit of a correctional bounce, but we'll see if that happens right now or not. If it doesn't, I'll hedge and wait for the next Fibonacci level to buy at. We're also long on wheat and soya. Let me show you those charts quickly. A few tranches here. Wheat's been knocking around the bottom forever and a day, ever since the Ukraine war started. So I don't know what's going on with that. Should have lifted it up long ago. And then soybeans, we're also long. We have 3 tranches on this, 1, 2, 3. They're all in profit, but soya is also ambling along the bottom in a very dull manner, I have to say. So folks, I hope you enjoyed that. If you did, please like and subscribe to the channel and make sure that you put your name in on the list below for the webinar on Wednesday on natural gas if you're interested. Take care.
Woke up this morning, checked my screen, red numbers flashing, looking real mean. Dow done dived, S&P in pain, NASDAQ sliding like a runaway train. Boss man sweating, brokers cry, bears got the market in a big old vice. I poured me coffee, took one sip, looked at my stocks, nearly lost my grip. Ooh, it's free fall Friday, ain't no place to hide. Bulls got